I totally get it, you know. I really do. Um and by the way, just for the record, since we're on here right now, I'm not gonna take it, but with this 15-minute candle close, the way it did right now, it's a pretty strong catalyst if we like get a pullback and it closes back above within the range that it should start kind of coming back up, and then finally grabbing this Asia high, which would be a pretty big trade. Again, I'm like not really focused on that right now, but that's a potential. But don't quote me on that. I'm not taking it. So I'm just letting you know, as of right now, if it continues to stay above Asia and it respects it, then we'll probably gun for like, you know, New York Stock Exchange opening price of 19,550, liquidity targets at around 19,610, and then finally the Asia high, maybe finally going for the Asia high. So that's on the table, FYI. I just really like that we got a strong 15-minute engulfing candle. Like that's a pretty strong time frame out of all the ones that I operate on. You know, like when I'm entering trades, I'll be looking at things like the 15-minute, the 5-minute, and then maybe the 2-minute, 1-minute. Like I'll use all the little time frames under 15 minutes to just kind of get a, you know, a grasp on a couple different things like imbalances, whatever, all those different things that I talk about. But a 15-minute engulfing bullish candle after we just tanked below the low and grabbed a whole bunch of liquidity, which is why I exited the trade, by the way, and I'll talk about that, is a really strong factor for this candle to be the beginning of a big continuation. But again, don't get FOMO. Like, you guys got to be in the right state of mind if you're going to be taking trades. Okay, so keep that in mind. Ideally, you'd actually want to see it maybe even come lower again and then pop back above. And that's like a really strong confirmation. And then again, old highs are liquidity targets. We're always going to target imbalances or liquidity. So just keep that in mind. If you are going to take anything, this is a potential trade here. Okay. And no, I will not count that as a win if this like flies. So just know I don't be trying to do that. Like I don't be trying to finesse you know, all these easy trade results when I'm not even telling you guys clearly to buy or sell or whatever. But I'm just giving you my insight so that you don't say I didn't tell you what's going on right now in the grand scheme of price. But I really want to get into like talking about these setups. So that's the last thing I'm gonna say. I'm gonna put the idea to the side and keep it moving. Okay. All right. Will you update your session times? What does that mean? Are you saying like on the Akashx website? Huh. Trying to see 7 p.m. PS. Well, on the Akashx official, it says 7 p.m. PST. The thing is, remember, United States had like daylight savings. So, yeah, I mean, I don't know what to tell you there. I thought maybe the flyers changed or something like that, but I mean, like 7 p.m. PST is 7 p.m. PST regardless, you know? Yeah, if you're outside of the United States, that has been something that has confused everybody for everybody's sessions. I'm not even gonna lie. Daylight savings definitely kind of threw a lot of people off. Okay. All right. Also on Akashx for UK, it says 3 p.m. Okay, got it. All right, so I'm gonna let the developers know, and I know a lot of them like they watch the sessions live here and whatnot, so they'll probably even see these comments right now. And but I'll bring it up in the educators chat that we have, and let everybody know that for international clients that we're having on the back end show a different time. So appreciate the heads up on that because yeah, I mean I can see how that can confuse people. So all right, cool. So let's keep it moving. Let's keep it moving here. All right. Yeah, tomorrow makes a good point too. Like the Telegram kind of lets you know um 10 minutes before the session, but I know when you want to plan your day and you like want to plan, especially a newer person that doesn't really know like how this system goes, I mean, we obviously want to have clear instruction on there, so for sure. Okay, guys, so again, let's recap where we were yesterday on the live session when we were looking at this trade. I'm just gonna delete this here real quick. All right, so first and foremost, we had the range here. And for those who have like no idea how my strategy works or what to look for, I'm going to show you guys in just a second. But what we want to focus on is this red box, which is called the Asian range. And this is the catalyst for me to look for entries. There's a lot of great ways to take advantage of trading NASDAQ, but this is just a way for me to, for myself and for people that use my system to kind of simplify the entry process. Because really with trading, you need a couple things. You need to get in at the right point, have the right type of stop loss, and then the right type of targets. So obviously for more experienced people, that's like ABC 1, 2, 3, but like we have to understand like the actual start to finish process of what trading really is. And when we do technical analysis and we're looking for opportunities based off of reading a chart, again, we want to have as clear indications or confirmations as possible to know when to jump into a trade. Because if we don't develop a strategy with consistency, then we're going to kind of fall victim to, you know, seeing the momentum of the moment and seeing the candles in the moment and just kind of like always letting the market force you into opportunities because you feel like it's leaving without you or whatever. And so when you start trading at random pieces of price without real intention or strategy, you'll just fall victim to like gambling, over trading, inconsistency, like all type of really bad habits. That is why many people fail. So this is just like really it's kind of like a framework to just know whether you should be entering or not for NASDAQ. So this strategy, I don't use it on anything else. I know people always like, oh, can we use it on this or that? And the answer is always going to be, yeah, you could, but how, I haven't built a system for that, you know? Like, in theory, we could all make a car from scratch, but it's like, dude, if there's already a BMW or whatever car brand you like and like it's right there for the taking, all you gotta do is pay the price to get it and drive it, like I'd rather just do that. I could build my own car, but I don't think I want to go through that headache. And it's not just that simple. So yeah, you can apply this strategy to other stuff, but where's the stop loss placement? You know, like what, like you got to know everything about that system. So because I'm only trading one pair during like one session, well, for the most part, yesterday I kind of broke my rule and I paid for it trading during London session. And it's not that you can't trade London session, because I know people here that do it, but like I don't usually do that. And I had it right, but I missed it by like a hair, and it is what it is. A stop loss is a stop loss, whether it's by an inch or a mile. So that's why it's so important, man, like to decide what you're gonna consistently do and be willing to live with the result if you break that. And unfortunately, like I had a very close finesse that I had on trading during London and it didn't work out. Luckily, we made up for it right now. But basically, again, one pair, one session, one strategy. So again, for the new people, I'm going to show you how to like put the red box and the significance of it and all that stuff. But basically, whenever we have that red box, we're going to either be looking for price to break out and continue. So that was a really beautiful like confirmation of the breakout model. So there's two models. There's the breakout model and the reversal model. This is the breakout model, how it looks like. And it happened during London session, very clean, and it just flew. So that was a beautiful trade for anybody who might have taken that. This is yesterday night. Like this is like what 4 a.m. Eastern time yesterday. So not like 5 hours ago 4 a.m., but the day before yesterday 4 a.m. to be clear. But obviously I didn't take any of that. I was sleeping, and then we were here when the New York Stock Exchange opened. Okay, so New York Stock Exchange opening price happened right here, and we saw price kind of like get really stuck in this range before just ultimately melting off. Now, I let everybody know in the live session, I'm like, hey, look, the only thing I don't like about selling at this point in time is the fact that we've already come up from a lot. Like, we were already super high in price when we started the sells. So typically, whenever you're going to sell the market, you want to try to sell as high as possible so you can catch the big move and not have, you know, price try to retrace on you or anything like that. So the higher that you can sell price, the better. Obviously, timing it correctly. And the lower that you can buy, the better as well. Okay. So again, like selling over here when the stock market opened was more ideal than selling it here. But again, this is my strategy and what I stick to. So at the end of the day, when we come back into that box, we have a potential decision to make whether we want to take a trade, because you know that is the point of entry, right? The second thing is, are we gonna sell or buy once we get into that point? So make no mistake, just because it crosses outside of the box doesn't mean you have to be taking trades. But as far as the strategy goes, that is when the opportunity comes knocking on the door. So ideally, we want to try to catch it at the right times when it's breaking to catch a really big move like this, obviously, right? Now, I didn't trade that session, whatever. We were on the live session here. This is like at 10:40 yesterday. So this is like 20 minutes left in the session. We started seeing price kind of come into this area. And I basically made a decision of like, okay, are we going to, what's it called? Sell or buy here? So in general, for my strategy, I call it the breakout strategy, right? So price in the box, it breaks and it continues. That's the breakout, right? I've never said that I have a break and retest strategy. You know, like the thing is, we learn concepts from other people, and so we try to like bring that into here, and you can, but like I don't teach you to do that. So when price comes back in, this is now a break at this point. The price broke, and now it's coming back into the area. Break and retest. I personally don't like the strategy, and I'm not saying that break and retest will never work. I'm just saying that I never built it to be a break and retest strategy. If not, I'd teach you that. Like, hey guys, we're gonna wait for it to break, come back, and then buy. I never say that. I say if we're gonna break, we need to see that price is like showing us the indication that it's ready to blast off with a candle closure, most ideally on at least a 5-minute time frame above the range, and that indicates that we're ready to go. So a break and retest, I don't teach that, and I don't think you should trade break and retest, especially if it moved a lot, like it moved like a big amount and then it starts coming back into it. I don't like it in general. So basically that's one of the reasons why I sold here. I was going with the momentum of the sellers really kicking in heavy, and I just don't like break and retests on my strategy. So all I needed was for price to just really show me it was ready to break, and you can watch the replay yesterday of when we started seeing it happen. But yeah, basically we took the reversal model on the live session yesterday. We always have a 500 pip stop loss, which is 5,000 ticks, and ideally we try to make 4 times our risk. But obviously if you can make even just what you risk for a 1-to-1, it's not bad. And at least there you can move stops to break even and then let the position continue to go, you know, as far as it can. Okay. Now, I know that on the 1 hour time frame, I was telling you guys that we had this this wick on the 1 hour time frame. right here. And this is why I teach supply and demand and all those concepts as well, because if I don't teach you supply and demand, imbalances, liquidity, all of those things, then we're going to be missing out on some concepts to understand here. So I know it sounds like it looks a little crazy to realize this, but if you really look, price was like boxed in here. Price had a really strong push to the downside, and this is that last wick that price pushed down before shooting price super high up during London, breaking structure above previous highs. So technically, the last low point, so this was the high, this was the last of the pullback point, and this was a new high. So price went to here and then made a new high. So technically, it doesn't really shift structure on the 1 hour unless we break and close below there. If that ends up maintaining, then it can come up, you know? And so that's why I told you we have to be very careful in that zone. If you guys were on the session, you know what I'm talking about. With price reacting from there. So like closing out profits basically in this vicinity would have been a smart thing to do to just secure something on the session. So yeah, again, you can always go back and watch the replay, but I just wanted to walk you through now that we have hindsight and just kind of see what happened there. And yeah, basically on the smaller time frames we were looking at it, I can go back here. And this is actually something that I like. This is a little detail that I think is going to help you guys. Is I like to see when price kind of what's the word? I don't know if hesitate is the right word, but where price kind of like hits the point of, like, let's say we want to look for a breakout, right? If we want to look for a breakout, sometimes we might get like a liquidity grab of Asia. And we saw, like, for example, here that happened, right? Price comes in, and you could, like, if you had a pending order or if you had like something, then you would have been entered and then boom, straight to stop loss, right? For the breakout model. That's why I like to kind of wait sometimes to not let that happen to you. But I actually like when this happens. Whenever we touch the point, we reject from it, and then we come back and break and close above that. That is such a strong confirmation for me personally. Like, I really like when, like, that as a very like detailed nugget, like little tip, is sometimes when, you know, we hadn't grabbed the liquidity of Asia at all at that point, right? Like price didn't at all touch this high point until we got to here. So notice how the first time that we touched that point, it was very sensitive and price kind of like gave us a really strong rejection off of it. But then later when this candle, so really like this candle right here was like the golden confirmation candle, where it was like a 5-minute break and close above the range after we rejected from it the first time. I think that right there is like such a beautiful, and you know, every day is going to be somewhat unique of how it kind of plays out, but for the most part, you'll notice that happening where you'll get like a rejection and then you get the move, and that ends up being like really good. So just keep that in mind, because that was kind of like what I saw in real time yesterday when we were looking at this setup. I was like, okay, I like this area, but we really need to see price kind of like show us that it's ready to break below, and we'll see it get really close, and then price I think ended up like flying. Yep. So look at that, price started pushing up really aggressively, and then we started getting the push below. So it got very close, kind of like rejected it, and then boom, it came back down again. So like that first, and you know, the market's not gonna always let you get that, by the way. Like sometimes it's just gonna go and it is what it is. But if you get that little rejection first and then price goes, that is like a really nice confirmation. So again, you saw it like on the flip side where it kind of like rejects, comes back, and then breaks out. And then here for the reversal model, we saw it like get really close, touch it, reject, and then break. It's like if they know that our strategy is working and they're trying to stop us. I'm just kidding, but it kind of feels like that sometimes. Yeah, yeah, like for example, we're like, oh, okay, the strategy is if it breaks out of the high here, we're gonna just buy, right? And so in real time, you're seeing it cross above, right? But then if you really let the candle close, it kind of closed right back below, and then boom, 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 you had price like drop all of this. You know, so like it technically crossed the point, but it didn't even break and close or nothing. It just kind of like wicked, then came back down, and then here we started seeing it really break and close above. Like that's an ideal scenario for me. So there's like the strategy, and then there's ideal scenarios of the strategy. When I say ideal scenarios, it's like it doesn't always make it easy for us to find good setups, but sometimes it makes it a lot easier. Like there's certain confirmations that just give me a lot more confidence in it, you know? And so, okay, we crossed, that's the alert that it's ready to break. But if we really just give it a sec, you'll see that it never ended up closing above. It just kind of like wicked the liquidity and then rejected. That's why I teach things like liquidity. Because if you don't understand what liquidity is, manipulation, fake outs, and things of that nature, you're not equipped to understand why the strategy doesn't work, or you know why it does what it does. So again, the Asian range is a very particular time of the day where price slows down. It's aftermarket hours, and so typically when you have that slowing down of price, number one, there's going to be a lot of built up liquidity of buyers and sellers that are all pent up in one area, which is why during London here we saw price break and grab all that liquidity from the lows during Asia, and then shift structure above, gunning for the liquidity now of the high. So it like grabbed liquidity and then reversed, grab liquidity and then reversed, and then we got the true continuation here. It is difficult to really like put these things into like perspective unless you see this stuff over and over and over. So don't beat yourself up over it. You gotta really like see this stuff a lot, and even when you do, you're still gonna take losses. As you saw, I took one last night by a hair, but again, a stop loss is a stop loss, right? But again, I'm just showing you like little things. So again, we saw like price reject and then continue, and then for the reversal model, same kind of thing. We saw it reject and then continue, and that's what really gave me a lot of confidence in the session to pull it right there, because of the fact that we saw it kind of like push away and then go. And yeah, basically, you know, we entered, and right away like price moved pretty swiftly into profits there. And so again, 2-to-1 risk to reward ratio right there. And then from that level, from that 30-minute demand zone, we literally saw, like I was telling you guys, like that 30-minute demand zone ended up being like a super catalyst for a reversal. And I know I saw some people that ended up taking the trade here. So I didn't really look at taking anything here because we already literally just closed 2% profit. And I didn't want to get in here because I was just good off of that win. Like I didn't want to give back the profit that I just made on this move. So I didn't opt in to take the second one, but I did see some people tag me that they ended up jumping in here, which is valid. You know, at the end of the day, like price technically didn't shift structure because we maintained this low here, and we started getting that aggressive reversal after a long drop. So yeah, it makes sense to be able to buy there, you know. And yeah, that's basically how that day ended. Yeah, no. Oof, price is breaking back below again. So number one, and I'm gonna go cover the other setups now, but if we continue bearish, obviously we'll gun for this liquidity, and then even potentially these lows, guys, will be like the liquidity targets for price to continue breaking back below, like to 19,100. Okay, because right now price we kind of saw it, you know, pull back up and now start closing back below Asia low. So we respected New York opening price here. But yeah, you see even the buys, ended up kind of like falling now. So you see, this is why right now I'm chilling though. Like this could end up now coming back up again. I'm cool on the opportunities, but I know we've been talking for a while, so I just wanted to check up on what NAS has been doing. These next 4 minutes are important with how this candle kind of closes. So on the smaller time frames, it's kind of hard to see, but on the 15-minute, it does look like it wants to continue lower as of right now. 30-minute closes in 20 minutes. Yeah, man, like this entire piece of price has been very, very like just completely all over the place. Super all over the place compared to like the heavy trending market that we were getting during this whole like bearish drop. Like this was a lot easier to trade than it was like in this box right now. Because right now price, like we hit that major fair value gap on the daily time frame, and since then we've kind of like wanted to come up, and now we're kind of like stuck here. And it's crazy because you can be stuck on NAS and it's moving thousands of pips. That's why you got to understand like what we're trading is very volatile. But yeah, like bullish targets, we'd be gunning for like these highs over here, filling in the fair value gaps up here, and then bearish targets would be basically all of these lows that we've formed along the way, just to like, you know, take all those early buyers out of the equation. And overall, the market sentiment, momentum, like everything is really more bearish than it is bullish. You know, like we've had you know, like this whole like rejection of the fair value gap on the daily, but we're not really getting like a real true like easy to read bullish price action. It's still overall like this looks like one complicated little pullback for one big continuation is what it looks like to me. So, all right, we're going to keep it going with the next setup that I wanted to go over. Let me check the chat though really quickly. All right, let's see. How did you not take that sell on the first fake out? I'm not sure which one you're talking about. Because the only sell of a, I mean, I don't know. I don't know which one you're talking about. Because this is the one that we caught on the stream here. And then last night, this is the next trade we're going to talk about, was from last night right here. So I just don't know which sell fake out you're talking about. But yeah, okay. So I'm going to delete this and move on to the second setup, which was last night's. Okay. All right, so a couple things with this setup. Couple things. So number one, this 30-minute demand zone was what caught my eye very early during Asian range. So if you guys are on the NAS chat and, you know, just on Telegram in general, you guys know that I dropped that picture saying like, hey guys, I'm expecting price to gravitate towards 19,450, where we have that 30-minute demand wick. So, you know, it was just like when you start to see, especially like on the higher time frames, like at least 15-minute minimum, but really more like 30-minute, 1 hour, 4 hour, we start to see these like areas of supply and demand, especially when they're this glaring, where price just like wicked and then shot up. So those wicks really tell a lot of story there when it comes to the intention of price. Now, the only thing that would have made that wick a stronger buy in the moment would be that typically for those demand zones, especially when we see them in the form of the wick, is we want to see, like, for example, if price like you know, like let's say here we get that wick and then price continues higher, we want to see it make a new high before we really trust that demand zone as much. If it doesn't make a new high, it doesn't mean that it can't work, but it's probably not going to be as strong. So like in this case, this high gets respected and then price comes into the demand zone. That's not as strong as if price would have made a new high before getting into the demand zone. I know that, again, is going to be a little confusing for a newer person. So I'm going to show you guys where to watch the pre-recorded content that shows you all the stuff that I'm talking about. But that's basically what happened here. So we had this high, and then we had this low, which is that wick. Now, after that wick formed, it would have been better if price would have broken and closed above this high before coming back down into that demand area to really make it super stronger. Because the price, like the market structure would have been more in alignment with that zone. But regardless, the zone was still very, glaring. Like it was like just a super obvious wick there. And then the fact that we had dropped this much during Asia, we don't usually see that. So typically the Asian range is going to be more so something like this, anywhere from like 500 to 1,000 pips wide. And this range was like 2,300 pips. So it's a very wide range. And so there was a lot of fair value gaps, like a lot of imbalance that was left behind, basically from this drop. Like we didn't see much, like we saw a lot of evenly balanced price action during New York, but during Asia it was just like sell, 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 sell. So we had a lot of imbalance that the market was gonna want to come and grab. At minimum, like I'm trying to find a time frame here. 45 minutes. Goes it more? No. Hour? Well, you can kind of see it like on multiple time frames. Some of the imbalances that, especially like this one's the more obvious one, but basically we needed to definitely give a pullback of that move. And so that's why I was like, okay, like I don't want to continue to sell this low right now because we're tapped into a demand zone and we just dropped thousands of pips during Asia. So I would expect some recovery. That was my thought process, and it was, again, correct. But unfortunately, like we just pulled the trigger too early, man. And it is what it is. This is the low right here. Okay. So initially, we saw that price kind of like wicked, came back up, then finally pushed below, and then I started seeing the 5 minutes start breaking and closing back into the range. I should have waited for a much more significant candle closure and just taken like a higher entry to really be safer. And unfortunately, again, like I just kind of jumped the gun on there a little bit. So basically, like, yeah, it tapped in, went like barely in profit. It went like maybe 100 something pips in profit, which is like halfway to a TP1. That's really nothing, honestly. So yeah, the entry was 19. I called it at 450 just to make it a clean number right there. And for the moment, all I did was snipe a stop loss. So it touched and then it kind of sat around. And then we started getting some real shift here. And then here we started getting the move. So again, it was very like extremely choppy regardless, even if I would have stayed up and seen this whole shenanigans going on. Yeah, eventually this ended up running for like a 1 to 3. A 3 to 1 right here. So again, the stop loss was like literally grabbed by a hair. But overall the demand zone held, and we did start filling in all those imbalances from this move that I was telling you guys. So again, the thought process of not continuing to sell when we already sold off thousands of pips heading into the entry is one thing. Understanding that there was a lot of imbalance left behind from this move. You can't really see it on this time frame, but again, on the other time frames, you saw a little bit more like of the whole imbalance of this move. So coming in to fill some of that, you know, those were the reasons. Tapping into demand zone, recovering a lot of imbalance. We already dropped thousands of pips before hitting the entry. Those were all the reasons for me preferring the reversal model over the breakout model in that situation. And again, it just happens to be that we literally got tagged out by a bit. I know some people would be like, hey, why don't we use bigger stop losses? For the most part, the 500 pip stop, I always say this, when the timing is correct, the stop loss size is perfect because it's gonna give us good risk to reward ratios. We just gotta like really time it as good as we can. And honestly, like I don't even really trade London session myself that actively, so you know, it kind of just played with us, and it's unfortunate, but you know what's done is done. So I know some people that still held it, you know, because it didn't really go that far below it. It maybe went what 650 pips, so like an extra 150 pips before like finally turning around. But yeah, that was basically that trade. Now let's fast forward to where we're at right now, coming into here. Okay, let me check the chat here real quick too. In the videos, we are told to choose a breakout or fake out. For alerts, however, you send according to. Yeah, so when I put together the educator training series video, I tell people that are learning something new that you may not want to try to tackle on multiple models and trying to do everything all at once. So if you're gonna pick a model, one versus the other, you probably want to go with the breakout model more than the fake out model, just because there's more layers to getting a good entry on the reversal model. Like you need to actually let it break first and then push back above, hopefully shift structure, you know, like understanding those concepts of market structure shift and waiting for price to break and then reverse. It's just more steps. And like again, I just feel like it's more of a two-step process of taking that trade versus the breakout model. There's really nothing to think about except, okay, price is breaking and closing below this or breaking and closing above this point. We get in for the buy or sell, you know? So over time, I think if you understand why one model could work in a certain situation more than the other, it gives you more options. Because back then what used to happen is that I would only trade the breakout model and teach the breakout model. And then there was times where I'm like, oh, I don't like the breakout here though, because of things that I just explained, like, oh, we already traveled thousands of pips into that entry. So I don't like the idea of selling there because we've already traveled so far into it, etc., etc. Like there's certain situations where I don't trust the breakout model because of other concepts that we talk about. And so it's like, if you only trade the breakout model, you basically can't take a trade then, or you're gonna take a risky trade. And so I'm like finding myself sitting out on some of those setups because I didn't trust the breakout model in that situation. This one would have been one of them, you know, because of this reason. And so that's why I was like, oh, like I started backtesting and trying to find ways to like myself take the reversal model and then teach it. And we've kind of found like a good middle ground. Again, we call it a 2-to-1 risk to reward ratio on the live session. So obviously, like we're actively taking reversal model trades that do well. I think I even had a 4-to-1 risk to reward ratio reversal model trade in March, somewhere up in here. I think it was like this sell off right here. So like we've definitely made some money on the reversal model, and that's why I wanted to like find a way to systematize, turn it into a system for the reversal model. So it just depends like how experienced you are of a trader, how much you can kind of like process right now. But again, the easier one is just the breakout model. And it just comes down to studying, taking notes, back testing, trading the strategy on a demo account or really small funds, and just kind of like trusting it more and more and getting to feel it more and more until you eventually want to use it to, get funded with a bigger account. We have some students here that have made 5-figure payouts with the strategy. So it's about scaling. Like, the strategy will help you get 5-figure payouts because it's already documented that students have done it. It's just like how much you really like study it and apply it and get to know it. And yeah, I mean, that's really nothing else to it. It's just consistency, right? More understanding of liquidity and manipulation. Would you use an indicator to find supply and demand zones? No, I don't. Okay. All right. So real quick, and then I'm gonna cover the last setup here, which is the one we just took. For those that want to learn it, you head over to Academy on Akashx. You go to Educator Training Series, and then you will see my profile right up here at the top. And then if you scroll, you'll see Basics. Smart Money is where I talk about liquidity, imbalance, fair value gap, all that stuff. Smart money concepts. And then Liberty Strategy is like the red box, breakout, fake out, all that. And then obviously don't gloss over risk management and psychology because you need all of that. Okay. So this is the golden zone right here. It's just a matter of going through it. And honestly, the live sessions, again, like sometimes we, are live trading or whatever, like yesterday. But for the most part, I really try to like just give you guys like an explanation of the strategy and really just help you understand it, because I feel like, yeah, like live trades are great, but if you get educated, you'll make more, because not only will you be able to find more opportunities on your own, but you'll also know how to prevent yourself from taking more stop losses, how to prevent yourself from losing too much on one trade. Like, education is what eliminates the 90% of mistakes that basically erase the 10%, which is copying from an expert. Like, you can take trades on a live session and follow signals and all that stuff, and it's a great piece of you becoming a good trader, and it teaches you a lot, and it can even help you earn. And we've seen the testimonials of people that just leverage the experts. But I feel like even the people that leverage the experts that get really good results are also educated. I think sometimes people get the misconception when they see like a payout or somebody that's doing really well in Akashx that's a student, and they're like, oh, the first thing that you're gonna want to know is like, what trades did you take? Who did you take trades from? And like, yeah, those are valid questions and they matter, but nobody ever asks or like really gets to see like, oh, how educated about trading is this person? And a lot of times, I'm not saying they have to be a technical expert or a superstar wizard trader. All I'm saying is that they thoroughly understand their risk management plan. They thoroughly know how to use TradeLocker or MetaTrader. Like, they know how to not make mistakes. They know how to not fall into psychological issues like revenge trading, over leveraging, all those other things, right? So just know that even you don't have to become the expert trader necessarily in Akashx, but there is an art to following experts the right way, especially when it comes to just consistently knowing what they look for, the risk management, those type of factors. But yeah, you can get to know everything that I do through here. And then the live sessions, you can pick my brain, asking questions, seeing what I see in real time. And that can help us kind of just get a better grip on things. But yeah, really quickly before I check the chat one last time before we go, this was the setup for today. So the reason why I wanted to go for a sell here was, number one, I already saw that the reversal model kicked into gear here and it flew up, respected these highs. So structure wise, we had this high, came down, pull back, came down, pullback, came down, price failed to make another high here, and now we're getting another break and close below this low. So market structure wise, we were bearish overall. Again, we have highs here that pushed down. Pullback, did not break a new high, came down. Pullback, did not break a new high, came down. Price came up, did not make a new high, and broke and closed below this low. And now we're at the Asia low again. So if momentum is like if you look at the momentum of the move, like it was coming in hot already into that entry. And we saw market structure forming new lower lows and lower highs. So to buy here would be counter to the trend, counter to the momentum. It's just, and we already saw the reversal model kind of like kick into gear and not really continue. Usually the reversal model, you'll see like days like this, where during London, the reversal model kicks in and it just flies for like thousands of pips. We got a decent reaction, don't get me wrong, but it wasn't one of these. Like, look at this reversal model here that flew versus this one that kind of like gave a small move. Like if you compare, right? And then also kind of like started coming back down. You know what I'm saying? Like this type of reversal model compared to this one is nowhere near the same type of, you know, like it's not really showing you like a true intention to just absolutely run that way, you know? So again, those are like little things I was looking at. And then the last thing too is, if you notice, same thing that we were talking about, the rejections, right? So I was looking at it and I'm like, okay, well, let's be patient. Let's see if we can get a nice little candle closure here, or at least like a rejection first and then go for it. So you can see price did reject off of it first, start coming up. Now, obviously at this point, I already had the alert ready, but the fact that we like rejected off of it and then boom, we saw it kind of like wick up and then drop. That's why I called it right there. So again, same thing that we were talking about earlier about price kind of like touching it and then going. We saw it happen again here. Like this is kind of like the trade that we took live, but on the high. So it was the reversal model. This is the breakout model, but again, it happened in a point where, you know, price kind of rejected and then dropped again. And so that's what made me really want to take it. So again, overall, market structure was forming new lows. Momentum was bearish. We already saw the reversal model fail earlier in the session. So at that point, you know, I wanted to take a sell. And then the last thing is the targets. So the targets were all of the liquidity that was sitting, basically kind of like support area, if you want to call it that. So look at these lows, this low, this low, and this low. This is liquidity, guys. In the educator training series, I talk about liquidity coming in the form of support, resistance, trend lines, different things. And so, you know, you can look at it on different time frames. You'll see that, you know, basically you had price have all of these lows. So there's a lot of stop losses, or a lot of liquidity, I should say better, that's sitting at these lows. So price, when it starts moving, it's going to want to take out all these people here. Now, once it takes that liquidity, we don't know if it's going to reject or if it's just going to continue blowing through and then grabbing this liquidity. Okay, so just know that if we're in sells and the market is going down aggressively, it's going to start looking for the next lows from the past, because that's where the liquidity is. If price is coming back down, we know it's going to grab liquidity here, liquidity here, liquidity here, and here. And these were all basically grouped up together, which is a big, like that's a big plus. Like that's going to gravitate the market big time. Now, depending how it reacts off there, then it has the potential to grab these lows, right? Long term. So just keep that in mind. Liquidity is so important, man. So again, all those other confirmations I talked about were important, but most importantly too is also where do we exit a trade. So in my mind, I'm like, dude, once we grab all this liquidity, which basically ends at 19,350 for a 2-to-1 risk to reward ratio, like that's where I have to really like, hey, what happened there? I have to really like monitor what price does there, because I do not want to have price reverse on me, because I mean, we formed a lot of imbalance on that drop, right? So I knew we would probably get at least a strong pullback, and I did not want to give back the profit. So yeah, basically like this last low is the end of this liquidity right here. So that was like my main target, which was over a 2-to-1, which I was happy to take that. But again, going back in here, we get that drop, and then price just started breaking, you know? Boom. And we grabbed that liquidity, right? And we saw as soon as we grabbed that liquidity, this is where I exited right here. So I started seeing the slow, like the turnaround, and I closed like 2.3, 2.4 right here. I already saw kind of like the little bit of a hesitation around the liquidity. So I'm like, bro, I like after taking a L last night, I was like, let me just secure this, because I need to make up for that loss, like on my account, you know? So I closed there and I was cool with that. Now, obviously, after we grabbed liquidity, now we've seen where price is at and what it's done. And again, I think overall, like, we're still respecting the highs. You know, like we're still making new lows in the market technically. So I still think momentum is more bearish than anything. But I'm cool, man. After taking a loss during London and everything and making 2.5% now, like I'm cool. I would focus more on sells than I would buys in this type of environment right now, but we'll see. But yeah, we're about 7 minutes over. It's really hard to like finish in an hour. So much to talk about. Is this and call for live trading? Well, number one, the call's over now. Sometimes we do live trading like yesterday, but for the most part, I try to educate a lot on the sessions, just because again, I feel like you're gonna make a lot more money understanding the strategy and everything. So I try to keep a nice balance if I can. Okay. But yeah, guys, hopefully you got a lot of value from today's session. You guys made some money. You guys have some good testimonials. Please make sure to drop it in the Telegram chats, tag me, social media, tag me, and leverage these results, guys, to continue running up this March Madness promo. We got, you know, free brand bucks giveaways, free Akashx membership giveaways. Like, there's a lot of money to be made, a lot of ranks to hit, a lot of things to achieve. Now that we've taken care of trading, like this is my ideal type of day, is where I can take a trade early in the day during New York, make a decent amount, like even if it's 1%, that's good, but 2.5%, super happy with that. Done for the day with trading. I can de-stress now, because trading is stressful. I don't care what nobody say. De-stress now. Go. I haven't even eaten breakfast, so I'm gonna go eat breakfast. Work out, post on social media, make content, help new people get started, and just keeping that same rotation every day. If you guys build that habit of staying on training calls, taking alerts, taking tap to trades, learning a strategy, getting on Zoom's presentations, sharing the business, like if you just live this life fully, and you can have a full-time job, you can do all that. I had a full-time job for a long time, my first years trading. So I know what it's like to try to multitask working full-time with doing the business and trading. And it's not easy, but it's very worth it. So keep it going, guys. I'll see you guys next Tuesday for our next live session. But until then, you can find me in the chats and social media as always. Appreciate you guys so much. And yeah, as always, guys, let's run it up.